Rupal Agarwal is joining us, senior research analyst, quantitative strategy at Bernstein. Rupal, good to have you with us here as always. Thanks very much. We seem to be in the grip of pretty strong momentum, and momentum can do crazy things. What's the call? I mean, purely from a quant perspective, are markets headed higher globally?
I mean, we are actually taking a relatively stronger, call on momentum. We do think that, this disconnect in terms of macro that we are seeing on Asia improving actually, and US or, most of the developed markets still showing at least a slowdown, tends to set up a good environment to chase momentum, at least on the Asia side. I think on US, we're still relatively more defensively positioned. We do think that some of this extreme rally that we've seen, especially on the longer duration growth stocks, in anticipation of a rate cut in the last few months, I think some of that will have to be repriced in.
Rupal, so you're saying it's wise to chase momentum in Asia. So where is the momentum in Asia? I remember in the last conversation, you were anticipating a rebound in China. That really hasn't materialized. There's also a lot of fatigue setting in that when are we going to get that stimulus out of China? So the question is broadly on Asia, where is the momentum and where does India stack up?
So I think where is momentum? I think most of the momentum has actually been happening on the Korea and Taiwan equities, largely driven by a lot of geopolitical support, as well as, this entire theme of AI picking up a lot of steam in recent time periods. India also is now looking reasonably well positioned from a momentum perspective. I do agree that, China has not recovered to the extent that we have been hoping for. But we've still not given up hope. In fact, in the recent call, we have again reiterated that we do think that we are again, not too far away from a potential rebound. In fact, this month has been reasonably fine, I would say, for China. And in fact, what type of stocks one needs to look for is actually a better way to look at Chinese equities going from here. So it's rather than taking a broad-based market level call, I think there are always parts of the market that have been doing well even in the last 3 years, and that's how we are approaching China even going forward.
Hi Rupal, good morning. The last few months have been very, very good for global equities on the whole. So everyone's asking what to buy, but I think the more pertinent question could be what to sell, what to avoid. Tell us, according to you, what should be avoided at these levels?
I think it really depends in terms of what markets you are looking at. So if I talk about India, I would say that, there has been this very strong high beta trade that has been doing very well for almost 3 years. That also aligns with, value stocks doing very well for almost 3 years now. Whereas the opposite side of, this anti-value, or I would say, more quality names, low beta names have been underperforming. So I do think that some of that extreme dispersion is creating an interesting environment to actually take off some profit, from the high beta trade, as well as I would say some of the value stocks. So that is where I would start, taking up some profit, especially in India. If you look at some of the other markets, again, the dynamics is completely opposite, in China. So I would say it's a complete opposite trade. We start taking off profits on the low beta side and actually start adding on high beta. So it's a very different setup in terms of which markets we are looking at.
Rupal, we'll leave it there. Thank you very much for joining us. Great speaking with you. It's always a pleasure having you here on CNBC-TV18. Rupal Agarwal of Bernstein on the quant side. We'll take a very quick commercial break here, but up next, our list of top stocks to watch for the day with our research team coming up in just a bit.